Hello and welcome to this week's Humble Investor Bull Bear Market Report. My name is Adam Straseske, and here are some important disclosures for you before we jump right into it. Also, if you do not have a copy of my book, Home Run Financial Planning, let me know and I will get a copy out to you. I'll make sure that you get a copy. Here's our agenda for today, where we're going to start with the broad market readings. We're going to get into the operating plan, and with regards to the broad market readings, we always look at whether or not we're in a bull or bear market first. Anybody that's paying attention to the market knows that we're in a bull market, and frankly we are in a bull market according to just about any standard out there. But we know, since both the MSCI All World and the S&P 500 are greatly outpacing Treasuries on a 12-month rolling basis. S&P 500 looks like it's picking up just a little bit above the MSCI All World ex-USA index, but both of them look really good and really bullish right now according to the 12-month momentum. As far as correction risk, still a little bit mixed this week. And what I wanted to point out right here, would like to point out, is notice on this oscillator right here, breadth really picked up when we broke out to new highs. We're not seeing that now. Breadth is way down here, but we've got new highs on the index. So that's just a little bit of a warning, I guess. It's just, not even a warning, it's just a weaker breakout. Not as many stocks are participating in this advance as we saw in this advance. So this could be the tail end of it right here. We don't know. As far as the longer term oscillator, it looks good. It looks fine. Looks a lot healthier for sure than the shorter term. And so we'll see if this has any effect on the market this week. But right now we're getting a little bit of a mixed signal as far as breadth and the price of the S&P 500. We look at the stage of the S&P 500. We've got a couple different things going on here. First of all, we're still on this broad bull channel, but what I'd like to point out is that we have clearly broken to the upside of it. This is a sign that it's just a sign of being overbought, and so I would expect some sort of correction in here, if nothing but just maybe even a sideways movement for a while, where we can just have a little bit of a correction and then possibly another advance. But right now the bulls are in complete control, and we are even breaking out of this tighter bull channel right here. So just really, as far as being overbought or oversold, we're really overbought right now, is what that's telling you, that the breaking out of the channel lines. Doesn't mean that the market's going to come down from here. Just means that it's overbought. And as far as our operating plan, we still like preferreds, the MSCI All World ex-USA, and a bunch of weekly swings in play right now. No scalps. And again, from last week, like I said, it's just not a lot of scalps out there. The All World ex-USA monthly trender up 1% for the week. Looks pretty good. Not as overbought as the S&P 500 when you look at the broad bull channel. And any purchases would be done on a little bit of a larger pullback. But frankly, we're going to like this until it either starts to underperform the S&P 500, it gets below Treasuries, or it gets below a 50% retracement. Till then, looks good for the All World ex-USA index. Canada down 0.66% for the week. Would have really liked to see another bull bar and follow through on that, but not all bad. We've got our stop adjusted up, and we've adjusted this thing up twice now. So looks good for Canada, and we'll see if the bulls can get past this bear inside bar. Basically more of a neutral week for Canada. UK up over 2% for the week. They're just crushing it here. Looks really good. We adjusted the stop up either last week or the week before. I can't remember. But looks good for UK right now. And here we are, Japan for the week, up 1.7%. Looks good for Japan. Would have liked to see it close on the high, but I'll take it. We've got a stop right down in here at the 57 range, and so it's got quite a little ways to move around. Looks good for Japan. Oil up over 4.5%. It's just cruising. Oil looks really good. We haven't adjusted the stop up. We probably could adjust the stop up to the 54 range, but right now we're going to keep it where it is, and we'll see how it looks coming into this week. U.S. Treasuries, by far the weakest index that we're looking at. Just doesn't look good for it. We broke out of the trading range, and then now we've broken out of the other trading range that it looked like that we had started to form here, but to the downside. So just doesn't look really good. We do have a second purchase range down in here. If prices get down within there, we're going to want to see a really strong buy signal to get involved with it. But all in all, doesn't look good for Treasuries, but we'll see if the bulls can pull it out. Australia, neutral week for Australia. Still in a bull channel here. Have broken out of the trading range, but we've got a second purchase price down in here. Lots of room to move around. And then, of course, an initial stop below there. Brazil up 0.92% for the week. Still like Brazil, of course. Like how it's charging up, and we'll see if it can break out to new highs. If it doesn't and it comes down, we've got a second purchase range in here and a stop even a little bit further below that. So for the monthly trender, we still want to build in the all world. No new weekly swings for this week. Like I mentioned last week, we've got some cash, but it'll be eaten up pretty quick if we get into any of those second purchase ranges, and nothing for the scalps. And with that, have a great week, and we'll talk to you next time.